Hello guys, welcome to this week's weekly video. And in this weekly video I want to share some more lights on candlesticks, and before I move on to formations in the next few days. But I want to start with candlestick because this is going to be the start point of the next few weeks video, and it's important to share with you these first. And in today we'll be looking at the candlestick, which most of us knows as the pin bar. So we call it the pin bar. And what does the pin bar look like? The pin bar could be an indecision candle. Okay, so some may call it, but it's an indecision candle. Okay, you can see that this pin bar oftentimes appear in some charts. Okay, it appears in chart setups. Okay, and sometimes it could appear on at the top, okay, of a setup, or could appear in areas like this, okay, and then price falls a little bit, okay, and then continues. Okay, so in many times we are thought, okay, when we started trading, all of us, okay, started trading, we are taught that the pin bar appears at the top of the trend, okay, at the top of the trend, or it could be a reversal pattern, okay. But apart from that being a reversal pattern, it has a pattern, okay, because each price movement has its own behavior, okay. So you want to be understanding the market behavior. That is how you're going to be able to identify what is really happening, okay, apart from just looking at the candlestick and then saying to yourself as a trader that this is a pin bar. You will also understand the market behavior, okay, so the chart behavior, because here everyone can read the price action, okay, everyone can actually look at the market and say, okay, this is bullish, okay, at what point should we start looking for reversals, okay. So we're going to expand in this video here. I'm just going to share with you the expansion range, okay. So what you should look at, it's one to look at just the pin bar and then say, okay, the pin bar, then how do you relate the pin bar to the market behavior? How do you relate the pin bar to the whole price movements over a certain period, okay, a certain time frame? Say maybe you are in the 1 minute time frame, you are in the 1 hourly time frame, you are in the 4 hourly time frame, you are in the daily, you are in the weekly. So how do you relate this pin bar to a lower time frame in order to be able to take a trading decision? Okay, there is a difference between a technical analyst and a trader, okay. So I like to tell people that when you're looking at technical analysis is actually a concept, okay, of understanding the market behavior, okay, the overall market participants, okay. You want to be looking at it psychologically, okay. You have to be looking at it psychologically and then understanding the overall market behavior. So it's more of an art than a science, okay. We have pattern repetition, okay, on some cases, and we have different variations of candles that could form in an area, but the market behavior could vary, okay. You could have series of higher lows, okay. At the point where you're looking at extreme, you can see a certain candle, okay, but the overall behavior of that area or price action in that environment, okay, doesn't really speak about a reversal, okay, but it can appear. So a pin bar is a price pattern that can appear anywhere, okay. So it can appear anywhere in any chart, okay. So this simply means that we have price opening maybe below, okay. We have price opening, and in a certain point we had a trading range, okay. The price moves up above the opening price, moves down below the opening price, okay, and close somewhere near the opening price, okay. This is what makes up the pin bar, and in that period here, this is what I want to explain to you in this video, how you can move or make a next step after understanding what the pin bar, or how you can relate the pin bar with the market movement, okay. Okay, let me show you to you. This is a pin bar here, and I want to use this example. I'm going to use two examples. I'm going to use this pin bar, and I'm going to go down on a lower time frame to share with you what happened when this pin bar actually did appear. Okay, so if you're looking at this, it's quite easy when you're looking at these, okay, on a larger picture or what has already happened. Okay, but how do you plan for what is happening? And the only way you do so is to go down on the lower time frame. Okay, so this chart here is on the daily time frame, and if you look at this here, I've always spoken to you about this. I like to see this on my chart because it gives me an idea. Okay, gives me an idea of where am I. Okay, so this is simply a 1 month trading period. Okay, all right, so let's understand the concept behind that very pin bar there. Okay, all right, so in that pin bar there, if you look at it closely, what happened during that period of that pin bar, okay, during the period of that pin bar is what I want to explain to you in this video here. Okay, so we look at the pin bar one more time, and we look at what happened during the period of the appearance of that pin bar. Okay, so here we had it that price actually did move up, okay, at one point, and then move back down, okay, in the same trading day. Okay, but we have it that price closed bullish. Okay, we had opening price here, okay, and we had closing price here. So that's why we have it as a bullish pin bar. Okay, we have a bullish pin bar there because we have different kinds of pin bar. We have a bullish pin bar, we have a bearish pin bar. Okay, this is also a bearish pin bar. We have price opening above and then closing below. Okay, so that's a bearish pin bar. But for this example, we have a bullish pin bar in this example. All right, so looking at this, if we would look at this as a reversal pattern, okay, it's quite good when you're looking at this, but overall you would understand that during this time price did make a high, drop back into these lows, okay, and then make another push back into this high. Okay, so what you want to be seeing is a break of this structure. Okay, you want to be seeing price breaks this structure, and you understand that in the close of the day that the market started making lower lows and lower highs. So what you do, what I recommend most times I do as a trader is I tend to understand what is happening afterwards. Okay, where are we coming from? What is most likely to be the outcome or the next price movement? Okay, so looking at this, you can see that you can also plug into this system here. Okay, so you have a structure here, okay, that is structure that should guide you, okay, when relating with the spin bar here. You would understand that in the start of the trading day, we had price consolidate around that point, okay, break below that point, and which would give you a most possible entry, okay, to continue whatever is happening here to the downside, which indicates that during the time that traders broke through this support or stayed around this environment here, that traders really loved this environment more. Okay, the set of traders that wanted to see price trade in this environment or activity happening in this environment were more of not done. Okay, so price have started making a new set of trend. Okay, and we see that price did breaking that point there, created some sort of structure again. You can see that that's a good opportunity for you to continue whatever is happening to the downside until price clears up this range. Okay, so for this example here, I'm not going to go deep down into price movements after the pin bar. I just wanted to let you know in this video here what goes on behind, okay, the pin bar. So behind every candle you see, there are smaller candles and smaller time frames which you want to be looking out for and understanding, okay, how what happened, okay, in the lower time frame, and how you can prepare yourself, okay, how you can adjust your trade, okay, based on that happening. Okay, so let's look at another example here, and in another example here we'll be looking at a pin bar. Okay, here, so we have a pin bar, and I know most people will not observe this because I'm not going to do much of this particular video or particular example more. So I'm just going to be doing two of these examples, and in the next video I'll share why I am so much concerned with these kind of examples here. So I'm looking at a pin bar that happened after a drop, Okay, you can see after a drop here, we had a drop, okay, and we have another push, okay, to the side before this pin bar appeared. So I'm looking at mostly those formations, those kind of pin bars, okay, that happened during that period. All right, so here we're looking at the example what happened during this period of this pin bar period. We are still on the daily time frame, and on the daily time frame we look at the lower time frame. Okay, so the lower time frame premise, this is actually what happened in the lower time frame premise. Okay, so we did have it that in the higher time frame, which was the daily, which we did look at before, we have price moving upside. So this area of the range that price did create a movement upside is what we're looking at to the left. Okay, what we're looking at to the left. Okay, so this area of price creating this upside was to the left. Okay, so guys, in the future I will relate with you guys more and more and more and more of how you can read market behavior. Okay, but for this example I don't want to get your head overly crowded with so much information at one time, so I will just quickly end this video with the little information I'm going to share with you, and I'm going to be back with more information on where these videos are going to be moving to. So it's best to get the introduction before I share with you the bigger story. Okay, I know some traders may actually be in a rush not to listen to these videos because they feel it is not important, but every detail of this video is going to be very important to you in the future. So here we have an uptrend. Okay, so we're looking at this decision candle here, and we had price trading down a little bit, then up, down a little bit inside of this area. Okay, so this is a 2-day range before this structure. Okay, I know a lot of traders, I was one of the set of traders that was also caught during this setup here. Okay, so we have price trading inside. I know some traders would be looking at this as support. Okay, sometimes it does work, sometimes it doesn't work, but as a tip in this video for the next one that is going to come, whenever I'm looking at support, okay, as a week, okay, as a week, let me share with you why I did say this. I'm looking at support as a week. Okay, this is the last 2-day candle before this indecision candle as a week. Okay, in a kind of reversal pattern, this lower area, which is the week or the lower area of that week, is not a static support. Okay, it's a dynamic support. Okay, it's a dynamic support. Okay, it's not a static support. What do I mean by static support? It is a support that have been tested multiple times. Okay, it's a key environment. Okay, but in this example, price only moved into that area and reversed. Okay, so what this means was, in the time frame or in the duration where market was moving up, some set of sellers, okay, actually looked at selling, okay, either selling short or finding an opportunity at that area to buy to a new high. Okay, and then they somehow were able to push price within the buying sequence or within the bullish pattern or continuation or the bullish trend. They were able to buy at that area and they find price attractive during that area. 2 days after, that area may not be as important as in the last 2 days. Okay, I don't know if I'm making sense to you, but if you look at your chart over and over again, okay, and you have some sort of reversal of this sort, maybe a small one, okay, you would see that this happens often every time. Okay, and traders tend to be trapped with this structure. Okay, so this structure here is what I'm going to be sharing with you here. Okay, so this is the structure here, and you can see that in this time the price moved back to the structure after 2 days. Okay, after a day. Okay, 2 days after, this structure was not an important area anymore. Okay, for price moved down, clearing the range, moving back into this resistance or creating its own resistance. All right, so it could be that price is either looking at invalidating this point or clearing out bunch of orders. Okay, some persons may actually look at this as block orders. Okay, be it whatever strategy you're looking at, but I'm not here to say much about other people's strategy. Okay, but you can look at as block orders. Okay, so here is cleared and then price closes back above the structure here. So if you're looking at taking a long trade or putting your stop loss just below here, you would have been caught in the sequence, or you would have been caught in the rush down of this area here. So in most subsequent videos, I'm going to be sharing with you also the Wyckoff theory, okay, of accumulation distribution, okay, mark up, mark down. You want to be looking at the uptrust and the UTAT. I'm going to be sharing with you more and more insight, what I've learned about the market as well. Okay, so here we have it that price did go up from this point, creating that indecision candle, and at the close of the day, that is when you will be able to spot that that was an indecision candle. Okay, so it gives an idea. So what I would do as a trader is to mark the extreme. Okay, I will mark the extreme of the previous daily candle, and that is going to be my reference point. Okay, my reference point is going to be the extreme of the last daily candle. That's where my max is going to be, and if price hit that point and continue upside, I'm going to look at first possibility of a U-turn, okay, happening. I'm going to share more on that. I know you guys, maybe some of you are new to this concept. It's the Wyckoff concept, but I'll share with you the U-turn, okay, those concepts and how you can apply them to your daily trading. Okay, so I apply the Wyckoff, I apply the Elliott wave, and I also apply a lot of concepts, but in all, the major thing is making money off the market. Whatever strategy you're using, you're combining certain strategies, it's fine, okay, as long as it brings out the result which you're looking for. All right, so here we had it that price did continue downside, and you want to be looking at moving average. Okay, you want to be looking at moving average. Certain moving average could also give you an indication of a strong bearish or bullish market, okay, a strong trend in the market, power in the market. You want to be looking at certain indicators, you'll be looking at the MACD or whatever you're looking at here. But here it's simple, okay, so you can be looking at that market did create the structure, started from that point, create a lower low and lower high, similar to the first example which I shared to you, and you can see that price continued downside. Okay, on the bigger scale, this was what happened. Price continued downside after that period. Okay, so it's actually a good way of picking or making an analysis of a continuation to the downside, or be a continuation upside. But in this example here, I'm going to use more of a continuation to downside. So this is one of the continuation technique which you could be looking at as a trader. All right, see you next time. Like, share these videos with friends. I hope this helps you in your trading, and if you have more questions, you can drop it in the comment section. I love you guys. See you next time.